So in this last session for today's class, we are looking at support and resistance. Support is um, so look at support and resistance as zones where price reacts to because many others are packed around. So areas on the chart where people will be buying and selling. So support and resistance areas are key to also identifying liquidity. Okay, so that's why so they are all linked together. So anytime you want to be mastering liquidity, you want to understand liquidity, you have to also understand support and resistance areas because support and resistance areas are where the most of the reactions happen on the market or demand supply zones. And it is that same area that market also plays to take liquidity. Okay, market sweeps, hands, and all that. So, with that said, support itself is a level where buyers will step in. So, support is like the floor. You take something like the table, you can sit on the table to push yourself up or jump, or you can stand on the floor or on the ground. Okay, that's your support, your foundation. And let's take resistance as the skies or the heavens, the roof above us. Okay. So that's the ceiling. So support and resistance are not magical areas. They work because of liquidity. Okay. When they are broken, they often flip roles. So support becomes resistance, resistance becomes support anytime they are broken. So you have to know that. Um, so we can use support and resistance as reference point for liquidity hands and structure shift, not just static lines. Okay. So that's what we can do. We can use those points as liquidity hands and structure shifts. Very important. It's very, very, very key. Very, 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 very key.
Ètò ìròyìn kúrò owó tó kù tẹ̀ tó ń lọ kó yìí gan kí ló ń sùn yìí.
Okay. So if you don't understand anything, please let me know. So let's put all together our review on market structure,
Bàkàrí àìsàn.
liquidity, and then support and resistance. So market structure tells you the direction. Um,
Olúbọ̀ ìbá kọ ẹ̀
market structure tells you
kí
the
ló fẹ́ wá lọ.
direction of the market. Market structure tells you the direction. Okay, use market structure to identify the trend, whether we are trending up, trending down, or we are in consolidation based on the structure. Then liquidity tells you where price is heading next. Okay, so it's the liquidity. Once you identify that they are at this point, which is seen as liquidity point, then that will tell you the direction the market will want to move. Then support and resistance will highlight where the liquidity is really hiding. Okay, where the liquidity is really, really, really hiding. So put all these three together and master them, and you can have a very strong trading strategy. We will go to the chart very soon to look at the illustrations for support and resistance. But look at Ecclesiastes 3, verse 1. It says that to everything there is a season, a time for every purpose under the heaven. So just like life has seasons, the market also has seasons, trends, rangings, and all that. So for us to be wise as traders, we need to discern the season that the market is in, whether the market is bullish, bearish, or sideways, and align with it, not fighting it. We shouldn't try trading against the trend. We do it most of all the time, most of the time. Okay, trading against the trend. Most often is because we think we are spotting a reversal or we think we are spotting something. But sometimes we are right. Okay. It's because we have not mastered liquidity and we are not looking at the bigger picture and trading with the big boys. Sometimes too, it's become very difficult to understand if a support is going to break or a resistance is going to break. Okay. So you keep hovering around that area until you are stopped out on a trade. Then you know that okay, it's going to break. And if you keep taking losses or even losing, getting stopped out, it's perfectly fine. It's part of the process. Over time, you are going to understand the things that led to those things that are happening to you. So allow those all those things to be part of the process of you learning. Good. So if you also look at Isaiah 28:16, it says that, Behold, I lay in Zion a foundation stone, a tested one. So support and resistance acts like foundations, foundation levels where price often holds. But just as foundation can be built upon or tested, support and resistance can flip, it can break, and it can be tested. Okay, and anytime it is being broken or being tested, then you should try look at or look for liquidity. Okay, because above resistance and below support, there is stop losses, orders, and a whole lot of things around those zones. So liquidity should come into your mind when a support is being tested because it can break. A wise trader sees them not as magical walls, but structural points where, um, yeah, so you have faith that this support is or resistance is going to hold. So you are kicking, but know that it can be tested, it can break. And it's breaking to hunt for liquidity, to hunt for money, something. And that's why it will break. With that said, let's quickly move to the chart once more time and try to locate yeah, and one thing I forgot, support and resistance. We cannot mention support and resistance without mentioning trend lines. Okay. We cannot mention support and resistance without mentioning trend lines, without mentioning trend lines. So we will get back to V75 quickly, but let's look at the support and resistance once more time, and then we can do that. So this is the 50 index trade that I was framing. So officially, we should not be taking that trade again because the support did not hold. Okay, so for because of this class, I decided to map out. This is the 15 minutes chart. Let me use 4 hour or 1 hour. Good. So let me use 1 hour. Yeah, you can use any time frame to map your key levels of support and resistance, but use the time frame that you'll be able to see the chart clearly. Okay. So why should we see this area as support and resistance? So resistance is like the ceiling and support is like the ground. So this zone here, we saw price was up, touched it, and then it moved up. It went to the upside. Okay. At the same time, okay, so touch it, move up, touch it, move up, touch it, move up, touch it, move up. How many times? Let's say one, two, three, fourth time move up. Okay, so on a fourth, mostly three times, fourth time, you should know that it is going to be strong. Let's also see here we see price hit it, drop, hit it, drop, hit it, drop the third time. Okay, and then it broke up. But the context for this trade was we were bullish, very bullish. But I'm only showing you that around that zone or that area, you would see price struggle. And when all this is happening, it's a sign of liquidity that is piling or liquidity. When there are struggles around support, liquidity is building. Oftentimes, you will see resistance and support levels, there will be consolidation around there. Price hit, drop, hit, drop, hit, drop, hit, break. We hit, we break. So we use this as a ceiling resistance. Drop down, broke it, retested, and drop. This is 50 index. From the upside, drop, move up, drop, move up, drop, move up, drop, move up, drop, broke it down, and then moved up. So though I have the zone, I've placed a zone. Okay. I've also placed like two lines, one up here and one up here. So this whole space is that zone, is that support zone. So what happens here? Those those who will be selling, um, those who will be selling here, they place their stop losses above the zone. Those who were also buying here, their stop losses are below this area, the lows. That is what makes this place a very strong area of for liquidity. Okay, for liquidity. So now price has been moving bearish. Um, we expected this support area to hold. So we need to learn or understand the characteristics of a zone or an area of interest to hold. Okay, so one, we see here an engulfing candle. Well, it tapped into it, engulfing, engulfing, engulfing. The engulfing took it up. So when it came back into the zone, this was the engulfing candlestick that caught my attention for this candle, bullish candle engulfed up to here. So that caused, so I said that the setup I sent, I said if price breaks above this area, where is the setup? Okay, so 50 index pull back to entry, patience. Let's see if it will move up to BOS again. So we buy. Okay, good. So what I meant by that is let's wait if it will move up to break structure. Okay, let's see because it pushed up. It didn't close above this area, but it dropped, moved up, broke this small internal structure, and then we saw the pushback and it took this low out. Liquidity was swept here. This low here should be protected because of the support. So if we should be waiting, if we move up to break above the high again and break structure, then we will find an entry. Okay, so that's what I said. And that didn't happen. We didn't see that happen because after that engulfing, this is 1 hour, there was a bearish engulfing that overshadowed the bullish engulfing. So right at the area, so if you check my chart, This is 15 minutes. If you check my chart, you see, this is the first line here, this line, and then I put this line there. That's that area. That's the area where if price is to close above that area, then we are going to go bullish. Because from the past, anytime we are above that area, price doesn't come down again. You see those two blue lines that I've put. Anytime we close above that area, we travel. Okay. When we are below it, we are down. Okay. Okay. Above that, we are up. Below it, we are down. Okay. So that is guiding me. And there is also blue line below here. Okay. Anytime that we are below the blue line here, we are more bearish. Okay. So right now, price is still just trading through the support zone. Okay. It's just trading through the support zone. What is it doing in the support zone? All those that have put stop losses around this consolidation, you see this consolidation, that's what we are sweeping. All those that have put stop losses here up to this low here. Okay. All the stop losses here, those who will be taking the sell right now, the breakout. Okay. Some will be, because of this engulfing, you can sell. You can sell because of this engulfing right now and just target this low here. Okay. Because it's sweeping all these lows here. Target this low, target this low. Because after sweeping these lows, it will move up to retest. If it pushes back into the support zone and moves up to close above and gets into where these two blue lines are above the support zone here, we are going to be bullish. Okay, so that's the way it is. You don't chase it. Okay, you don't chase it unless you are too sure that, I mean, just allow it to go. It will give you the opportunity back. So the confirmation we needed. So I placed that line. So we got all that we can get in order to take this trade, but we didn't get the proper break of structure to carry the trade to the upside. But below here, it gave us the all the formation that we can get inside the support here. We got we got a low here, a low here, a low here that shifted, that closed above this area. This low closed above this area and dropped to close above this low. So what do we expect? We expected price to move up and take out this area. If we had seen that this area taken, then on the drop, a retest, we will be going bullish. But it tried so hard. It tries so hard. All the time, it gets resisted around this zone. You see, it didn't get close to this area to close above. It gets resisted. And with this engulfing, it makes it clear that we are not going to go bullish. It means that price is trading through the support like nobody's business. Okay. It's trading through the support like nobody's business. But you see how the market is moving. We see how it's moving. We see a high here, relative equal highs here. Okay, so this is the formation for price to drop. So first there was a low here. There was this low. The last low here. the low took out a previous high into this area. Okay. Once that happened, price impulsively moves to shift structure. Okay. Then after doing that, we expect a retest. So on the way coming, on the way going up, it created this area, this small consolidation here as liquidity and pushed more down, dropped and even pushed more down, but it gave us equal highs, relative equal highs. From there, it dropped. If we had not broken above this high here, this buy wouldn't have happened. So once we break, sorry, we break below, we broke below it, traded below it, a retest was the sell. That's exactly what I was looking here. So look at the formation. There has to be, for you to see the sell, like the setup, a clean setup. In a bullish situation, we have a high that gave us uh, a low, and we should see price move up again to take that high out. So this is a sign of liquidity sweep, or we can say it is break of structure. Now, when this happens, this move should come impulsively and take this low out again. We should see this. So take a screenshot of this. If you are in a bullish situation, see this. No matter, even if you are in a lower time frame, see this. Once you see this, expect some kind of liquidity around somewhere here for price to induce or take out before you get your confirmation. If you get liquidity here, then this high is going to be somehow protected. Okay. So when price was moving up, it moved up, and then gave us that liquidity on the way. Drop, push up, drop. Okay, that sideways moving. Went up, then it came in like this. That also broke a small structure there. Then it went back to take it out. And that was our buy entry. So on this engulfing move, or sometimes the below at the top here, that's where you can take your entry. Once the high point has not been taken out and you see the liquidity swept as not, then you can take your entry. Now, we got price come. Where is your target? This area that it gave you. If it doesn't sweep it or take it out, the setup will not be valid. It must trade to take that out. So we trade to break it. Then in a more consecutive setup or way is a retest. So let's see for this range, let's see on the fib. So this gave us 38, 50% equilibrium, and that was the entry. Okay, that was the entry for this sell. But because it did not retrace into deep premium, I know that price is selling now, but it's going to move up and take this area out. Okay, so there's going to be a buy. It's either price wants to trade through the support and break through like it's going down and then reverse. Okay, reverse. And if it reverses, the only target is going to have is to sweep this 50%. So if we shift, you can shift the fib like this and leave it for days or a long time. You will see that a time will come that price will buy. Once it takes this 50% out into 61.8% or 78, market will retrace before it goes up. The only target price will have when it start buying is this, will be this. So that's what is going to happen. I have seen this multiple times happening on the chart. Because, yeah, even on gold, it happens. Okay, on gold. Because this one should have come to premium. It didn't. So price will come back and take it out. Good. So this is the formation you should have. This is what did not happen. This is what didn't happen here. We got everything, but that did not happen. Okay, so let's see. Um, let's backtest it again. Let me even use 5 minutes or even 10 minutes. Good. We are clear here. So we have price trades. Um, so we have a low here. Let me see. Yeah, we have this low, this area here, that and price, we had a high. So we had a high here that took this low into this area. And then price moves impulsively to break shift structure. So this is it. Now, we should expect price to come down here, come down here, and on the way, give us some inducement. Give us some inducement around this area for price to go up and break this high. So that we on a retest we can buy. That did not happen. It did not happen. If you also look at this area, we can see this low here. We can also see this low here. So price from the up here we took this area. From up, we took this area into this zone and then moved up to break this area. Moved up to break this area here. Okay. So once we moved up to break that area, when it dropped down, it induced, we had this low here first, and it broke that low into this fair value gap here. What did we get? We got a perfect buy entry that broke structure. Okay, but this is on 5 minutes. This is the first buy I took that I was in profit, the one I sent. So on the retest, I was expecting that once it takes this low out as liquidity, it should have reversed from here to go up. But that's where that blue line I drew came in. After this, it never closed above that blue line. So this was the sign that it will not go up again. Because if it was to break above this blue line to the upside again, or even close above it, no matter how low it comes, we're going to see price reverse and go bullish. So that was it. If I'm back testing. Yeah. So support and resistance, liquidity, market structure, everything works hand in hand. So we can use this formula if you are looking for setups. We can use this formula as a way to spot. Okay, let me take a screenshot of this and then we can study it. Good. So yeah, I think we've done a lot for today. Yeah, so you said we should look at what vein 75. Okay, so 25 is engulfing to the upside. Yeah, we will get it. So vein 75, let's quickly look at it. And Uche, are you there? God willing, tomorrow Uche will present for us how to navigate trading view. So and then
Yes, I'm here.
yeah, Uche, God willing, tomorrow you will help us. So please prepare. And then if Dennis joins, is going to show us how to use the mobile phone to do analysis. Your phone to do analysis, the tools you can use and all that. Um, if Uche joins. Sorry, if Dennis joins. And then after that, in the last session, we will look at two pairs that we will analyze and trade. So currently, I'm trying to grow $14 to $200. I'm around 100 and something. Once I'm able to get successful doing that, I will now start a new challenge growing $100 to 10,000, 10K. So if any of you wants to join me on that challenge, we can all do it. Um, I'm not going to give signals, but we are all going to use the knowledge we have. And then once I get set up, so every Sunday we will analyze two or three pairs and get a direction that we want to trade. But in terms of managing the trade, you manage your own trade because we can blow it. It should be money that you are willing to blow because yeah, so I am going to grow. You can also decide to grow $20 to 100 to 200, but I will be taking $100 to 10K, and I hope I will achieve that. So on volatility 75, so volatility 75 reacted to this fair value gap on the higher time frame. Okay, so I call this setup here around here, this buy, and it's really, 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 really fucked. Okay, so right now, I mean, the consolidation was too much that I got bored and I left it. Okay, so we had this. Let me go to 4 hour. Good. Good. So we had this imbalance here. We had this fair value gap here, here, and then here. So that's where it was trading, and I was suspecting it to give us the buy. It consolidate, and finally, when we got bored and left it alone, it hit the other block itself down here, engulfed, and then took off. So right now, it's trading inside this new fair value gap it created as a result of the big move that happened. Okay, so we can expect a full fill, or we can expect what ICT calls consequent encroachment, half of the big fair value gap. That is around 50% here to go bullish this way. So that's what we can look at right now. But there are a series of about 3, 4 hour candles that are all dropping. So it's I mean we have to wait and see on the smaller time frame what will happen here. We have to be very, very patient to see a 4 hour engulfing bullish candle before we can decide to jump on the buys. Otherwise, it can sweep to the downside. The other thing is that so we saw this previous low sweep taken by this move here, by this, taken by this. So what do we expect? We should see price move to shift structure. Okay, so where is the low? That low that we took is this. So we should expect price to shift to take this high. And that is only when on the higher time frame, we would expect a pullback. And then we know that we are buying above this hori- diagonal resistance, this trend line, above the trend line. So if until that happens, we are not going anywhere. We are not going bullish. Is it that price will keep dropping, or we'll just be trading inside this triangle here? Triangle. Because in the triangle here that I've marked, we can trade. When we break up, then we will be good, likely good to go. And let's see, price is also struggling. Break below it, pushed up inside. Below, up, below, up. So maybe let's see if this time it will sweep the fair value gap and break below it. If it breaks below it, we have a very long journey to go because there is a low point around here that does not have any structural liquidity, any liquidity here, and it's likely price might fill this gap or even take this low out before reversing to break that trend line. The same thing happened on what I'm saying happened on 31S. And I said it multiple times, but we all did not pay attention. And today, I also did not focus on it to take that trade. Today, 31S is is just going. 31S is just like going.